Hey drivers, welcome to Fleet Finance, a video series dedicated to educating drivers on the basics of finance and how to make the most of your paycheck. Trucking is a unique career in that your paycheck is dependent upon the decisions you make and the time you put in. This makes it difficult for those with less work ethic, but it's great news for harder working individuals. We want our drivers to grow their wealth and be successful by making good financial decisions. For our first episode, we want to begin with an obvious first step, understanding your pay settlement. You have to have a good understanding of your pay and how it works before you can maximize your earnings. Today, we are going to focus on company drivers. For lease purchase and owner-operators, check out our next video. So let's get started. Here is what a typical settlement looks like. You'll notice the basic information at the top: your name, driver code, the week of the settlement, and below you'll see there are 3 sections to every settlement: the load summary, deductions, reimbursements, and earnings, and the pay summary. The load summary is pretty straightforward. For each load you drove during the pay period, you'll see the pickup date, delivery date, order number, where it came from, and where it went, whether it was loaded or empty, and finally, you have your miles per load and pay per load with a total at the bottom. Next, this section will include any deductions, earnings, and reimbursements. Some deductions you might see include escrow, legal deductions, advances, and expenses from the road. All company drivers have to build up a $500 escrow account. It's built up by deducting $25 each week for 20 weeks. It's important to understand that the escrow is not technically a cost to you. Eventually you'll receive this money back. Think of it like a deposit you make when you rent a new property. LTI also offers up to $150 advance each week. It is not required that you take an advance, but if you do, you'll see it deducted in the next pay period. We don't recommend you take an advance unless you really need one. Basically, an advance is you borrowing from your future paycheck. So remember, if you take an advance, you'll see a deduction the following week. Some deductions you'll be reimbursed for. These include parking, fuel, tolls, scales, washouts, oil, antifreeze, and load locks. When you use your Comm data card on any of these items, you won't see them on your settlement, as they do not affect your pay. If you use a Comm Check, you will see these items show up on the deductions, but don't worry, if you notice, they'll be reimbursed below. Sometimes you'll need to pay for such things with a Comm Check. For example, tolls don't accept Comm data cards, so you'll have to request a Comm Check for a toll. So let's say we send you a $50 Comm Check. The deduction will be $52.75 because Comm data charges a $2.75 fee. Now let's say the toll actually cost $40. You'll then see a $42.75 reimbursement. $40 for the toll and $2.75 for the fee. You'll then have $10 left over in your pocket. It's important that you always turn in receipts when using Comm Checks, as that is how we determine what to reimburse you for. Without a receipt, we can't reimburse you, so always turn in your receipts, and it helps to do so in a timely manner. If you notice, this fuel deduction has no reimbursement below. Why? It could be that the driver forgot to turn in his or her receipt for the fuel they bought. Or it could be that they did turn in the receipt, but turned it in too late for the reimbursement to show up on this settlement, in which case the reimbursement will show up on next week's settlement. As long as there's a receipt, we'll make sure you get reimbursed. Finally, you have the earnings section. This is any added pay that didn't come directly from your base pay rate. This is where you'll see such things as detention pay, layover pay, stop-offs, productivity pay, fuel incentives, vacation pay, referral bonuses, and more. Now we'll look at the summary of all this, starting with your taxable income. Gross pay is simply your total pay for each load plus your earnings. Truck drivers are unique in that 25% of your load pay is tax-free. The IRS has issued this to assist you in covering daily expenses on the road. So you're only getting taxed on $1,425, or 75% of your total load pay. That's great news for you. Base rate per mile is what we pay you for each mile you drive. Actual rate per mile is what your pay per mile becomes once you add in all of the earnings you received. In this example, you've made $430.45. If we add that to your load pay, then divide it by the miles you drove, you are actually earning 65 cents per mile. Next is the full summary. Remember, you're only getting taxed on 75% of your load pay. You may see some of the following deductions: federal tax, Medicare tax, Social Security, disability insurance, and 401k, if you're enrolled, that is. Some drivers will see an income tax, but some won't. This depends on the state you live in. States that don't charge income taxes include Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. If you live in any other state, you'll see an income tax. If you live in Illinois, you'll see an Illinois income tax. But if you live in any other state with an income tax, it'll be a Missouri income tax, whether you live in Missouri or not. Finally, we add back in deductions, reimbursements, and your per diem pay. None of these items are taxed, so they are added at the end. Finally, you have net pay. This is the amount you'll see on your paycheck. Thanks for watching Fleet Finance's first educational video. If you have any questions regarding your settlement, please give us a call and ask for the payroll department. More videos will be coming soon covering a variety of topics. If there's a specific topic you'd like to cover, comment on it on this video.